If we could all time our investments perfectly, we'll be rich. This one thing happened to me recently in the stock market, which actually gives a better grasp of timing your investments. So you guys know what I'm going to do, right? Me as DS Learner Finance, yep. I'm going to fill you guys in on them gems. So make sure you stay tuned, keep watching.
You know what you're watching, DS Learner Finance. Whoa.
If you guys have been watching me carefully, you'll know that I own 2 stocks in the London Stock Exchange market. Direct Line and JD Sports, people. But one itsy bitsy thing you guys might not know is that my portfolio is a little bit unbalanced. I've got more value in my Direct Line stocks than I actually do in my JD stocks. So you guys know what I was looking to do. Rebalance, obviously. Coincidentally, at the beginning of this year, January 2019 we're in, I looked at the share price in JD Sports fashion stocks, and I noticed a really key thing, guys. The stocks were cheap. We're talking £3.66 per share. Easily one of the lowest prices throughout the whole year, guys. I was jumping at the opportunity, but you guys know me, DS Learner Finance. At first I was a bit skeptical about whether or not to buy these shares, because majority of the time when the share price changes, it changes for a very good reason. Something is happening. So I actually looked at the news, upon which there was nothing, people. So I was definitely interested in buying some stocks, because effectively I was getting cheap bargains right then. I placed an order to buy some more JD Sports fashion stocks, and you can obviously guess what happened, right? It didn't work. It didn't work, people. Oh my gosh. The share price rose that following morning to £3.96, and I wasn't feeling it then, because I realized obviously I could have bought the shares so much cheaper. So you guys know what this implies. One, markets are like the weather. Good one day and then bad another day. More importantly, number 2 is that markets are a reflection of the human psychology. Think about it. As we get closer to the festive season, we get more and more excited. Us people and us investors, more importantly, because we're going to see our family, we're going to have time, lots of time off work, we're going to eat some good food, we're going to get drunk, you know what I mean? We're going to have fun. So that's where the focus is on during that season. So what that means is the demand in the investment market goes down relative to availability of stocks. And that is quite interesting, because you guys know demand and supply. When the demand is low and the supply is high, naturally the price will drop, which is basically what happened, that £3.66 price. On the flip side, as the Christmas period finished and as the new year began, things came back to normal again. Investors were interested in the stock market again, which in turn caused the stock market price to rise, which was why I couldn't buy the shares at the original price I placed my order at. Instead, it had risen to £3.96. And this is what I've learned recently from the stock market. It's just that it's a reflection of us as people. And it's actually quite similar to a silly mistake that I made in the stock market last year. I actually did a video on, so make sure you guys check it out if you haven't, which was basically about buying more stocks in the stock that I originally owned shares in just after they released a really good half-year report. The share price rose up to such a stage that it couldn't support itself. So eventually when things came crashing down, so did my finances, because I overspent. Whereas if I just waited a few more days after that report had been released, I could have saved myself so much money and used my money more effectively, i.e. buy more shares with it. Oh, crushing, right? It just hurts thinking about it right now. You guys better believe I'm not making that silly mistake again. Trust me. And so, because this actually happened to me during the Christmas/New Year period, it made me think, DS Learner Finance, if this is happening then, could this also be happening at certain times in the rest of the year? So the next thing I'm going to actually do is look at how the stock, well, my stocks in particular, behave before Easter, during Easter and after Easter, and that will give me a better insight on what's basically going on. But for the time being, it does seem to be true, and it makes sense, guys. So for me, the best days to invest, i.e. the cheapest prices, which we get about them bargains, people, are the days where investors are thinking about the stock market the least. And on the other side, the worst days to invest, i.e. the highest prices, might be the days where investors are focusing heavily on it, i.e. into the new year, where they're thinking, you know what, I've got to get my investments going, I've got to do this, I've got to do that. Now everyone has a new year plan, so maybe that's like typically the worst day to invest, which would make sense because obviously everyone has a new year resolution and very few of us actually stick to it. But you can see what I'm trying to go with this. It's down to human psychology. And what's crazy about all of this is that it ties in really well with what my favorite saying is from Warren Buffett, and it's that be greedy when others are fearful, and be fearful when others are greedy. It really goes well with it, and it's basically a form of demand supply against the share price. So you guys could clearly tell that stock market is an interesting place, and ultimately it's all about learning from your mistakes earlier on and not making them in the future. So all of these experiences and skills that I'm learning in the stock market is taking me one step closer to my goal of acquiring financial freedom. And who knows, maybe you guys have also noticed this occurrence in the stock market as well. It would be great to know what you guys have learned from it. And also I've done a reading list in the short description box below about stock market investment books I've read and can definitely increase your investment knowledge wherever you are. Beginner stage, intermediate and professional. It still drops them gems, trust me. So make sure you guys check it out. It's your favorite YouTuber, guys, Dami Solari. I talk about property investments, financial management and stock market investments too, like this one, giving you that consistent content. You know, before you guys can go about doing whatever you're going to do for the rest of the day, say it with me: like, subscribe and share, people. DS Learning Finance. Whoa. Bye, guys.
Whoa.
Ha!